In this video, traders, we're going to look at what is the momentum and value effect. Hey guys, warm welcome to you. Okay, so this is one for investors or one for swing traders looking to find another reason to buy a stock or another strategy, something else they can perhaps plug into an existing system that they have or an existing investment thesis. So what is value and what is momentum effect? Two things that have occurred for years and years, and they continue to occur now, that potentially uncover a decent edge in the market for investors. Okay, so let's have a look at momentum. So the momentum effect is that outperforming stocks will continue to outperform. And if we look at this from a short-term perspective as well, that is very often the case. When we see momentum on a trend day, for example, that tends to continue right into the closing bell. So if you look at that from an investor's perspective, if you've got a stock that's rising and it keeps going, it tends to continue. Whether or not that's justified from a valuation is irrelevant. The fact that it's got that forward momentum, the fact that nothing's stopping it, means it will just continue and continue. And it's the same with the losers. Losers continue to underperform. Now that does actually throw up an opportunity for investors, in that if a momentum stock, if a loser is constantly being beaten down and it's exhibiting momentum, and it's literally carrying on from its fair value and even lower, that does present an opportunity for investors, because you utilize this momentum to force it even to a better price. Of course, you want to try and time it as best you can, but if the momentum is causing this stock to continually trade lower for no real justification, once that selling has stopped, then there's a bit of a snapback. Even if the stock isn't doing so well, the company's not doing so well, there's even a snapback from that low valuation to a fair, in inverted commas, before any even growth potential comes into play. So that's something to consider. And why does this happen? It's like the investor herding mentality, right? Especially for momentum stocks to the upside. And we see this now when I'm doing this video. You can see all throughout years in history, when stocks are performing well, other hedge funds pile in, other mutual funds come in. And if you think about the logic of that, if you forget for a moment that you're perhaps an individual trader or an individual investor and your performance is what it is, and you live with it or you don't. If you were being paid to do the job, i.e. you're a hedge fund manager, a mutual fund manager, etc. Maybe not so much a mutual fund manager, because you may well just select every stock out there. But let's say you're rewarded for your stock picking skills, whatever capacity that may be. You are more likely to pick the stocks that others have picked, because you are going to be benchmarked, like it or not, against other hedge fund managers. Let's just use hedge funds as an example here, their performance with a similar model. And so unless you want to go completely out on a limb and try and massively outperform and then risk being underperforming hugely, it makes sense from a perspective of running the fund to have capital allocated to the same kind of things that everyone else is, because then you're broadly going to run it all together in the same kind of performance. If the market struggles, then you can say, well, yeah, we are down, but look at all the other funds, they're all down as well. Market's up, yeah, I'm all up with them. You could see why people will get this herding mentality, in that because they're benchmarked against each other, that's why they would do it. Whereas people like us, we're not benchmarked against anything. We just want to make some more money, we want to grow our capital in the case of investing. And so we can think about buying different stocks that others won't. But going back to this point, if we can recognize stocks that just do have momentum because they have the group of people in, then that presents an opportunity for us to ride that momentum, ride that wave. Or vice versa, is if we were able to short, perhaps where investors may not be, if we're traders, if we're able to short, we could wait and see that the momentum stocks, the stocks that are very favorites of the hedge funds, if something happens to them that causes the company to be devalued, there's going to be a lot of people running out of a very small door, and that could present an opportunity for us. Okay, look at the value section. So stocks with below average balance sheets tend to outperform growth stocks. Now, this is a funny anomaly, really. You would consider it that this isn't the case. The reason this happens is that a lot of people will buy these stocks assuming that there's a way more upside to be had, and there almost has to be, because the risk is far higher. You know, if you're buying a stock with a poor balance sheet, then you're taking on a lot of risk, because the company's obviously broken in some respects, maybe not permanently, but there's some damage done to the company. And so for that risk of it perhaps going bankrupt or perhaps struggling for the next 4 or 5 years, you want to be rewarded for taking on that extra risk. And so generally these stocks are going to outperform the growth stocks because they've got a big gap to move. If you consider, you know, suddenly a poor balance sheet, just getting back to a neutral balance sheet can cause these stocks to double. And then when they start generating some capital and getting out of the hole they're in, you start seeing, you know, treble, quadrupling. And a value stock, you know, there's a broad definition here, but loosely it's going to be a stock that's got a high dividend yield. So obviously low value price relative to the dividend that's coming out, and a low price to book ratio or a low PE ratio, and lower than competitors in the same sector is one way of identifying something. So a stock that's, you know, potentially a value stock is something that maybe isn't performing as well as other competitors, but has got an opportunity to perhaps take market share and increase its profitability from that. So anyway, guys, that's the momentum effect and the value effect. Something to consider potentially when we're investing. Maybe might throw up some decent trading opportunities if we have that in the back of our minds when allocating capital. Take care. See you in the next one. Bye bye.